Hi traders, welcome to this week's market review, September 28th. We're looking at the Euro specifically this week, and we're going to touch on the GBP as well. There is a divergence between them, as we're going to see. Before we do that though guys, so far before the week started, we thought we'd recap on last week's market. The Aussie dollar is immensely oversold on a daily level and also on a weekly level. And you can see here, this is some form of inverse head and shoulders. The left shoulder, an inverse head, and a possible right shoulder forming here. So unless this pair is planning to really plummet, we are expecting some form of resistance to be formed anywhere between this 87.58 price and 86.78 price. So that's 100 pips to go there, maximum extent on this pair. Without further ado, let's look at the euro. We've done this kind of analysis before, where we actually take you through the daily and look all the way through from daily to weekly and monthly. So this is the daily range that we've had here. It started with this double top that I've just drawn with the two arrows, and then we formed this kind of inverse megaphone pattern which broke out to the downside just a couple of weeks back, just when it actually fell short of the 132, 131 price. There you have the breakout now with that long arrow I've just drawn, and obviously we are in a downtrend. Reduced interest rates from the Eurozone, constant monetary easing policy, a strong dollar. It's all sort of come together there, and the safe haven dollar has obviously been quite a successful trade to be making in recent weeks and even months. But now we're looking at a situation here where we're moving from a daily to this weekly chart, and we can actually see that there is some sort of support in sight finally. We can see here around 126.80, possibly to 126. Previous levels in history of supports. There you have it in 2011 August, then again November 2012. We're now coming up towards the November period 2014, so maybe if we're in line with our theory, which is sort of Dow related theory of history repeating itself, we might see some pullbacks coming our way. Now long term, we've now moved you to a monthly chart, so we can just understand what's going on here. It wasn't that surprising that the euro continued to drop when it peaked round about 139. If you see here on the upper blue line, which I'm going to highlight now here in red, that's actually been a trend line for quite some time now, since the all-time highs back in 2006. And we see here a technical chart here, which is some form of a rising wedge, and these can tend to actually break out to the upside in the long run, which is interesting. So unlikely that this pair is going to drop anywhere below sort of 120 levels, and in the meantime we'd expect a firm support to be anchored around 126 if we carry on with this long-term monthly chart and the bottom support line. I'm drawing you here with arrows now an additional technical pattern to support longer term. This is monthly and annually bullish markets. This is a reversal shape called inverse head and shoulders, which we've spoken about many times, and we can see two shoulders there I've just circled, and now the inverse head. So we don't expect this euro to crash beyond 120, and we really would be surprised if it broke below any of the recent lows. When I say recent, I'm talking about long-term recent lows of 2012 and 11. So worth keeping an eye on that euro-dollar pair for the long run there. Let's move now to the daily chart of the pound just to finish off. We've seen that as the euro crashes, the pound has sort of been recovering itself a little bit, moving from 160.30 levels towards 162.40 levels at the moment, and tried to break out just about 164 levels. So you have a 400 pip range there. I've already circled the gap, and we spoke about it in last week's review. It tried to break out this upper resistance line here of this megaphone type channel. So if we see it breaking up beyond 163, then you could sort of go long on that pair. Would be quite a good trade with tight stops. Anything else that crosses now below this gap, again we're at the gap around 162.40, and you would just want to carry on shorting. So keep a close eye on that, and put it up against the euro dollar to see how those two move in tandem or not. And last but not least guys, put them both up against the euro GBP to really see and track the balance of power between those two currencies. Thanks guys. Before we leave you and wish you good luck for this week ahead, Remember, we do have data coming out on Tuesday in the UK with the current account and Canada's GDP, but it's all geared towards Wednesday, Thursday, and Friday, of course. And the main announcements are going to take place on Thursday with the ECB press conference, the US unemployment claims, and obviously non-farm payrolls coming out on Friday. So trade safe, guys, and once again, have a great week.